If we continue up, it's going to cause problems. So in love with Nvidia that it's carrying the whole rest of the market. If that on earnings does not come out gangbusters, you're looking at a whole market sell-off.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
First thing I have to talk about here is the fact that we now have the 10-year yield. Look at this, guys. All right, the 10-year yield is now at 4.34%. It's a double top right from here, but look at this. You have to go back to 2007, the last time we saw the 10-year yield at this point. Now, for those of you that know about the 10-year and ultimately what happened in 07, we remember that the markets topped before the Great Recession. Now, I'm not saying that that's what we're headed towards. What I'm saying is that there's a certain amount of stress that's put on the economic picture or the economy, and when you have higher rates, it means more stress. Things break. We've seen it earlier this year with Silicon Valley Bank, with other banking stocks. Well, guess what? We're now at these levels. If we break above this range, you could be looking at some major breaks in the system, in the financial system. All right, the other thing to mention is mortgage rates. The 30-year mortgage is now as high as it was going back to 2000. That's the dot-com bubble high. So not only is the 10-year back to 07 levels before the financial crisis, but now you take the 30-year, the mortgage rates going back to 2000. The other thing I'll mention here real quick, guys, at 10 a.m. this morning, watch for the home sales numbers. I'm very curious. I don't think this is going to be a major mover for the markets, but I am curious to see, with mortgage rates 7 to 8% now on a 30-year, what do the home sales numbers look like? That could be very telling to see if the home data, if the housing market is starting to stall and decline. We see that basically what we have is Nvidia. Now, Nvidia has been a rock star, an absolute rock star. And again, what we're seeing this morning is Nvidia is trading right up here at 481. Now, this is the kicker, guys. We know that this has earnings. All right, there's earnings coming out right tomorrow after the bell. Wednesday at around 4 o'clock, 4 p.m. Eastern time, you're going to get earnings. Now, the kicker is this. We see a very clear channel, right? So channel, lows, 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 and we didn't quite get down there. Then you have the high, high, and high, right? So the idea here is that we're trading at 481, which, by the way, is a double top high. All right, so we're at double top, but if you're looking for your stats on where Nvidia could go on earnings, this is what it's shaping up to be. Upside is somewhat limited now. So essentially, as Nvidia stock rallies higher, and we're now talking about a move from about 400 at the lows to now 481. That's a 20% move within less than a week going into earnings. What essentially happens here, folks, is that when we get into a situation where price rallies significantly into earnings, it essentially prices in even better numbers. So, right now we're looking at Nvidia probably beating estimates, but to justify price action where it is, we are going to have to see them blow away estimates and raise guidance. Otherwise, the stock will likely sell off on earnings. So if we're looking at kind of gauging it to what it could do, your upside is to about $505 right there. Your downside is down to about 400. All right, that gives you that same channel. And again, you have to trust, listen, it's not always the keys here, but ultimately what you have to see is that this channel has held. So as a probability trader, and remember, traders in general, most traders fail. In fact, 95% of day traders fail. The reason they fail is because they cannot deal with emotion. All right, emotion ultimately comes out, and that creates a scenario where they do the wrong thing at the wrong time. And in these situations, it makes them do the wrong thing. You have to trust the charts. Now, it doesn't mean the charts are always going to be right. Always remember that. It's a probability basis. So when we're talking about probabilities, a great probability would be 70% success rate. 7 out of 10 winners, you're an all-star. You're a Hall of Famer. You're something like that. So what we're looking at here is when we look at a chart like this, you could say, okay, well, why can't Nvidia go up here or up here or up here? And the answer is it can, but probability-wise, based on history of this price action, you're probably limiting your upside to here and your downside to right here. All right, so the closer we get to the 505 level, or 500 even number, right at that high end, the less upside is potentially in play there. All right, so again, very, very important to understand. So the first thing I want to look at here is oil and gold. So let's take a look at gold first. I know there's a lot of gold bugs out there, including myself, and let's take a look at what we have going on. So we have gold at a very pivotal level. All right, so I am long gold. I'm not going to, kid you on that. I'm absolutely long gold. And again, the thought process here is that you have a very beautiful downsloping trend line, pivot point to pivot point to pivot point, and here we are right into that line. We should get a bounce here. This is a triple top, even though I'm only showing two of them. But if we zoom out, we can see the triple top, right? Here's your triple top right here to here to here. The triple tops are shallow pullbacks. They usually break out. The double tops are big pullbacks like that. So big, here's your high, here's your correction, here's your double top, here's your correction, here's your triple top, smaller correction, and usually we get a move to the upside. So just keep that in the back of your mind. So I continue to be bullish on gold, and you might say, well, why is silver doing so much better? And the answer is very simple. The optimism for people on the economy is very, very high right now, right? Everyone's thinking it's a soft landing, no landing at all. We're just going to be all good and great. In fact, the Atlanta Fed has GDP at 5.6% for the third quarter. So I mean, even the Fed is saying, hey, listen, this economy's rocking and rolling. I'm a skeptic. I'm not going to lie. I'm a skeptic on that. But the answer is because silver is more of an industrial metal inclusive of a safety store, this gets a bigger move versus gold has a very small move because the gold trade is more of a safety hedge. Right now, the markets are doing well these last couple days, so gold's not going to do as well. And also, the dollar has stayed relatively strong. If we look at the DXY real quick, the DXY continues to be in this down area here. We can see, again, channel. I do continue to believe the dollar is probably going to pull back. Don't forget, the Federal Reserve, the Jackson Hole meeting is Friday. Well, the meeting starts on Thursday, but Jerome Powell's speech is on Friday at 10:05 a.m. My guess is, and again, this is just me, is that I'm expecting to see a pullback in the dollar based on the channel here. We'll watch very closely, and obviously I'll keep you guys updated. All right, so let's just go over a couple other things here, guys. I just want to really briefly touch on it. So we know that we're coming into Nvidia earnings. That's the big factor here. Also watch the 10-year yield. That is going to be key. Remember, in the beginning of this broadcast, I talked about how the 10-year yield is now at highs from 2007, the 30-year mortgage at highs from 2000 even, right? So the dot-com bubble. You have to realize that this is stress. Think about it like, just imagine you're putting weights on my shoulders. And when the yield is at 3%, it's dealable. 4% dealable. 5%, I'm starting to kind of, buckle. If you keep adding higher rates, things will break. It's just the nature of it. All right, so you have to be realistic in that respect and understand that if we continue up, it's going to cause problems. Now, right now, the market's saying, hey, put on your, if you remember cartoons, they have the hearts in the eyes. Like, that's what the market is doing right now with Nvidia. So in love with Nvidia that it's carrying the whole rest of the market. If that on earnings does not come out gangbusters, you're looking at a whole market sell-off.